And the U.S. stock index futures pointed to a higher open today as investors geared up for a slew of economic data while keeping a close eye on oil and the political space. Today, investors will be greeted by a cluster of new data as key economic releases are published throughout the trading day. At 8:30 a.m. Eastern Time, jobless claims, personal income, and outlays are all due out, which will then be followed by Chicago PMI at 9:45 and the pending home sales at 10 a.m. Meanwhile, geopolitics will continue to remain a dominant theme after markets showed signs of turbulence earlier this week as tensions rose between the U.S. and North Korea. Now, Jill Maladrino, VOA Channels TV business correspondent, is joined by Phil Davis, CEO of PhilStockWorld.com, to discuss the resilience in the U.S. markets.
For joining us for Channels.
Hi.
And I want to get your thoughts on the market because it was another interesting day on Tuesday where we opened up about 1% down in the indices, only to close up 2 to 3 tenths higher.
Yeah, incredible move. I mean,
even with North Korea firing missiles. And
hey, you know, it's only bothers some people, doesn't bother everybody.
right. I mean, do you think this buy the dip mentality is still going to be the trend as it stands right now?
I think it will be until the dip buyers get punished. They haven't really been punished. Every time they're effectively rewarded for it. Now, in reality, since early August, the market hasn't gone anywhere. You know, we called a top back on the 10th.
Right.
The last time I was here, we were talking about the market topping out. And it's been, you know, drifting along at that top, but it just keeps banging up. Now, if you're a technical person, you might say that's actually technically bullish, that you're forming a consolidation underneath the resistance of the top of the market, and you're going to break higher. But there's also something called an island top pattern, which is when you get to a ridiculous level that nobody's going to pay more than, you just keep hitting it and hitting it and hitting it until finally people give up and go.
Have you been surprised with all the uncertainty in the market, whether it's from a policy perspective or what's happening on a geopolitical perspective, and you know, even the situation that we're handling domestically with Hurricane Harvey, that the market is as resilient as it has been? Because we've always been taught in Markets 101, markets take uncertainty, and you wouldn't believe it if you looked at a chart over the past year.
Yeah. No, the only uncertainty is whether or not the Fed and the other central banks are going to keep pouring money into the markets. And they are. I mean, we just had that meeting at Jackson Hole where all the central bankers were like, hey, we did a fantastic job. Isn't this great? Steady as she goes. Mm-hmm. So until they see some serious signs of inflation, which means they've overdone it, they're not going to consider like cutting back too much on the QE. And that means more and more money is going to pour into markets, not just here, but globally. And in fact, the U.S. markets are lagging behind the emerging markets in growth this year by a pretty wide margin because the global markets are smaller, yet the central banks in those markets are pumping in money also. So all the central banks are pushing money into the markets, and they're jamming prices higher and higher. It's amazing what people are willing to pay for companies these days. All
right. Well, thank you very much, Phil, for joining me. And thank you. I'm Jill Malandrino, business correspondent for VOA Channel's Business News.
And in Asia, the indices closed mixed today as the dollar extended gains and investors digested China manufacturing and services PMIs, as well as solid U.S. economic data. Japan's Nikkei 225 rose 0.72%, with gains seen across automakers and most tech stocks as the dollar strengthened against the yen. Meanwhile, South Korea's Kospi raised 0.38%. Australia's ASX 200 tacked on 0.79% to finish at 5,714 as the tail end of earnings reporting season approached. Greater China markets were mixed. Hong Kong's Hang Seng Index retreated 0.53% as China bank stocks weighed on the index. On the mainland, the Shanghai Composite slipped 0.08%, while the Shenzhen Composite gained 0.31%. When we come back after the break, gasoline prices hit $2 a gallon for the first time since 2015. Details in a moment. Do stay with us.